Actually, if you were to look at the rate regime, I think for a good number of years, good number of quarters, the rate regime was actually quite in the lower band. In fact, we were probably witnessing for the first time in 2 to 3 decades, I would say, the kind of rates which we have never seen in the past. So it was a fairly long period of very low rate regime, I must say. So now with the international developments happening, with the war going on and with the commodity prices having moved up, etc., it's quite natural that inflationary tendencies are there across all the countries. In fact, in many countries, this probably would be the record inflation which they have had over the last several decades. So India is no exception, but I must say that India has managed it quite well, though our inflation is still higher than what we were experiencing, but still it is not one of those very high inflation which we are seeing in some of the other countries. So therefore, especially this happening during pandemic period is really a blessing in disguise for India, because you know that in the pandemic anyway economic activity was on the lower side. So if we had to really combine that with inflation, probably things would have been worse. So our regulators have been very carefully towing the line of giving impetus to the growth, at the same time not letting inflation completely go out of control. So they have managed it quite well all this while, and it's a right action taken by regulators to keep increasing the repo rate now to bring down the inflation and to manage the liquidity in the market, and also to ensure that this doesn't come too much in the way of the growth of the economy, because almost all the business are reviving back to growth now. So though it's outside the range of what the central bank ideally would want, it's 7% is clearly on the higher side, but I think the actions taken by the central government till now, RBI till now, has been pretty commendable, and I'm sure it's only expected to go up as we see. We are expecting at least 40 to 50 basis points hike even in the coming meeting. I think market is also pretty much now factoring this, if you ask me. Even when we meet with the promoters across the segments, whether it's corporate or retail or SME, I think everybody is now getting warmed up to the fact that rates are going to be on the higher side. So I think even their own business model, they are factoring these things into account. So I would say that though it's not a very desirable thing to have a high rate, but I think with the fact that it's been managed quite well and the expectations of the participants have also been managed reasonably well, I expect the economic activity to be continuing to be reviving rather than this coming in the way of growth. No, actually the cause of this revival in the economic activity and the impetus which you are seeing in the economic activity is also due to the fact that technology has enabled the entire BFSI system, I must say. And thanks to COVID, clearly the adoption of digital has been on the rise. And if you look at what we were experiencing as citizens in the country, everything we could have ordered only through using mobile, etc. So I think the adoption of digital really was at its peak during the COVID period. And also if you look at the kind of population, the demography of the population today, I think with the predominant younger population constituting the population of the country, who are pretty much used to embracing digital very seamlessly, embracing mobile, embracing digital very seamlessly. They are very comfortable doing transactions through internet or mobile. I think it's but natural that everything is moving towards enabling everything through digitally. So in my view, if there is any one country which is ready for this, I must say India is ready for this, because I think the number of transactions which you are seeing, even if you look at the thanks to UPI and thanks to Paytms of the world, number of transactions are today 3-4 times of what maybe China is experiencing, or maybe 10 times of what US is experiencing. So I think we are clearly adapting it much better than many countries, and with the demography to our advantage, I only see this trajectory only going up. So I think we are pretty much ready, and I must say that today it's actually a blessing in disguise, because this is actually sort of bridging the gap of having to spend too much money in creating brick and mortar infrastructure, and it also causes a lot of difficulties in the movement of people, etc., whereas digital seamlessly enables all this. See, if you ask me, I think changing from a legacy system to a new system, not necessarily now, even before, for example, when people were using a core banking system of Finacle 7, when they were moving to Finacle 10, many of the banks use Infosys Finacle for their core banking system. So I have seen this many times in the past, that whenever a new system with new capabilities come in, there is always this little bit of disruption when they shift from old legacy into new. So if you ask me today, in order to counter that sort of disruption, today the models which have emerged is you need not necessarily go and invest in them to be in your organization. You can always go for a hiring model where it's a pay per user kind of model. So today many of the platform companies are surviving so very well. Not only surviving, they are actually doing so well because of the change in the way even BFSI or any other institution, for example, today is looking at embracing technology by adopting newer way of using it. So you don't have to necessarily invest too much money, and many of these developments which you are seeing in the technology side seamlessly overlay their features on the existing legacy. So they are very much used to the fact that many of the institutions have legacy system. So how do you adapt that to the new one which they are coming up with? Not only adapting to the past, if you look at the way technology is moving towards where everything is going to be cloud-based, etc., all the new platforms and all the new solutions which are coming in technology are also embedded with the fact that it can be mobile enabled or cloud enabled. Those kind of things are already featured there. So I would say that it's inevitable that when you are using new, it will definitely cause a little bit of disruption. But at the end of the day, the features are far superior. The safety features are far superior, the cyber security aspects are taken care, etc. I think it's a necessity more than anything. So I think we'll have to just live with that little bit of inconvenience, and people can always look at alternate models so that they don't have to necessarily invest too much money into building a new system. So in a per user pay model, you can always change over to any new development without having to worry about the sunk cost.